Welcome to the deep dive. Today, we're pulling back the curtain on a company that, well, you might not see headlining tech news every single day like some others, but it's quietly becoming just absolutely vital to the whole AI revolution. We're talking about Broadcom.
Right.
And our mission today really is to figure out what makes them this trillion-dollar infrastructure titan.
Yeah.
And understand how they're aiming for that even more exclusive, $2 trillion club. So, okay, let's unpack this. How does a company that started, deep in semiconductors get to be such a foundational piece of this huge tech landscape, especially now with AI just everywhere?
It's really fascinating when you look at the shift. I mean, think about the U.S. economy, say, over the last 20 years.
Okay.
It's completely changed. You go back to 2005, the biggest companies by market cap. ExxonMobil, $392 billion. General Electric, $375 billion. Industrial energy giants.
Right, household names, but different sectors.
Exactly. Now, fast forward 2 decades, the top 5 are all tech.
Right.
Nvidia, it's hitting $4 trillion. Microsoft, $3.6 trillion. Apple, $3.5. Alphabet, $2.8. Amazon, $2.4 trillion.
Wow.
And Broadcom, sitting right there around,
Yeah.
$1.5 trillion right now. It's clearly on that path, playing this absolutely critical, but often unseen role in data centers and AI infrastructure.
Okay, and when you say unseen, that brings up this statistic that, for me, is just, mind-boggling. What I find so amazing about Broadcom is this. 99% of all internet traffic crosses through some type of Broadcom technology.
Yeah.
When I first heard that, I thought, how? How is that even possible? How do they get so embedded everywhere? And what does that mean now with AI demanding even more data, faster speed?
It's an incredible figure, isn't it?
Yeah.
And that 99%, it covers so much ground.
Like what specifically?
Well, you're talking about the core stuff, network switches, routers, the absolute backbone of the internet.
Okay.
Then there's specialized optical parts for high-speed fiber, the chips inside, massive data centers, even, the Wi-Fi chips in your phone, your laptop, the access points in offices.
So truly everywhere data moves.
Pretty much. They're not just selling parts. They become foundational.
Yeah.
It's like they built the plumbing for the internet.
Right.
And that gives them this unique view, this control over how information flows, which is a massive advantage now that AI is generating just insane amounts of data that needs to move super fast, super efficiently. They're upgrading the plumbing for AI.
That makes sense. That deep embedding in the infrastructure, it explains a lot. Started in semis, but then branched out strategically. Broadband, mobile, cable, data centers, and now, importantly, software and security. It's a big bet on infrastructure.
Precisely. And that software piece, it's proven to be a really smart move, especially lately.
You mean VMware?
Exactly. The acquisition of VMware late in 2023, that was huge. And what Hock Tan, the CEO, has done since then is aggressively switch VMware Cloud Foundation VCF over to a subscription model.
Okay, so VCF, remind us, that's their main platform for businesses running their own clouds or hybrid cloud.
Yeah, basically VMware's integrated suite for private and hybrid cloud management. It's core enterprise stuff.
And shifting that to subscription, that's not just changing the price tag, is it? It's about locking customers in.
It's definitely more than just price. It creates a predictable, recurring revenue stream from their biggest clients.
Yeah.
Makes those customers much stickier, as they say. Broadcom says well over 90% of its top 10,000 customers are using VCF now under this model. It's a classic enterprise software playbook, really, but executed with Broadcom's typical intensity.
And the results?
The results are clear. Their infrastructure software operating margin, it jumped from 67% to 77% compared to the year-ago quarter. That's largely thanks to VMware fitting in so well.
Wow, a 10-point jump.
Yeah. So it's not just adding revenue, it's strengthening that whole foundational infrastructure play, making them even harder to replace for big companies.
Okay, sounds great on paper. But moves like that, so aggressive. Are there downsides? What about, say, smaller customers who maybe can't swing the new model? Or even morale inside VMware after the acquisition?
That's a really fair question. And yes, there can be downsides. A rapid shift like this, focusing on the big enterprise clients, it can mean some smaller customers get left behind or find it too expensive.
Right.
Broadcom's been pretty open about focusing on their largest, most strategic accounts. They know some smaller ones might churn. For the big guys, the value is there, but it does change the dynamic.
And internally?
Well, integrating a company the size of VMware is always complex. There are always challenges. But Broadcom has a reputation, a track record for these kinds of integrations. They focus very hard on operational efficiency, profitability.
Okay, so these strategic moves, especially VMware, they seem to be working. You can see it in the financials too, right? The momentum looks pretty strong.
Oh, absolutely. The numbers are screaming momentum. Their latest reported quarter, the third quarter, record revenue, $15.9 billion,
15.9 billion.
and accelerating, up to 22% year over year.
That's fast growth for a company that size.
It is.
Yeah.
And maybe more importantly for investors, the adjusted earnings per share, EPS, jumped 36% to $1.69.
Yeah. So profitability is growing even faster than revenue.
Exactly. These aren't just big numbers. They really show that the strategy, the market position, it's translated directly to the bottom line.
But, for someone looking at Broadcom, is this sustainable? Or is this acceleration maybe tied to just a few really big bets that could, suddenly shift?
That's the key question, isn't it? The billion-dollar question, maybe even $1 trillion now. The acceleration is impressive. And a huge chunk of it is being driven directly by AI opportunities.
Okay.
Broadcom had already put out some estimates, right? They thought their AI business could be worth somewhere between $60 and $90 billion by 2027. That was mainly from their 3 existing big hyperscale customers.
The cloud giants, presumably.
Right. But here's the really fresh news, the dynamic part. CEO Hock Tan just announced that a major new prospect, and everyone pretty much believes this is OpenAI.
Ah, OpenAI, okay.
They approved a production order for Broadcom's custom AI accelerators.
Custom AI accelerators. Okay, so we hear tons about Nvidia's GPUs dominating AI training. What's different here? Why would OpenAI go for custom chips from Broadcom?
It really highlights the specialization happening in AI compute. NVIDIA's GPUs are fantastic general-purpose workhorses for AI.
Right.
But these custom accelerators, often called ASICs, application-specific integrated circuits, they're different. They are designed for extreme efficiency on very specific tasks.
Tailor-made, basically.
Exactly. For a company like OpenAI operating at just massive scale, these custom chips aren't just about raw speed. They're about optimizing everything: power consumption, latency, how fast data moves for their specific AI models, especially for running inferences.
Okay, so efficiency and cost at scale become critical.
Precisely. And Broadcom has deep expertise here, designing complex, high-performance chips for networking and computing. Plus, they have these long-standing ties with the big cloud players, so they can build these tailored solutions that can seriously cut operating costs and boost performance for these AI giants.
And this OpenAI deal, how big is it? It's huge.
Yeah.
This single deal is expected to bring in an additional $10 billion in revenue next year.
$10 billion. From one customer, one deal.
That's the number. It's transformative.
Wow. Okay, that's astonishing. But doesn't relying so much on just a few huge customers, these hyperscalers, for so much AI revenue, doesn't that create its own risk?
Mm-hmm.
Especially since the AI field is changing so fast?
It absolutely does. That's concentration risk, plain and simple.
Yeah.
When your customers are that big, their buying decisions can really swing your quarterly numbers. Big time.
Right.
But Broadcom does have some cushions. They have deep, long-running relationships with these hyperscalers across lots of different products. They're not just selling AI chips. They're selling the networking gear, storage components, the software stack with VMware now. They're really embedded.
So it's harder for those customers to just switch suppliers.
It's stickier, yeah. Plus, the sheer scale of this AI build-out is just enormous. Even a few hyperscalers represent a massive ongoing opportunity. And landing this potential OpenAI deal shows they can win new big fish, too. Okay, so that kind of deal really does change the game for their growth story. Let's look at that path to the $2 trillion valuation then. Wall Street's estimates. They're projecting what, about $63 billion in revenue for 2025?
$63.1 billion is the consensus, yeah.
Okay. And if you look at their price-to-sales ratio, how the market values their revenue, if that stays roughly the same, they'd need about $80 billion a year in revenue to support a $1 trillion market cap.
Right. Simple math based on current ratios.
Wall Street's been pretty bullish, guiding for maybe 20% annual revenue growth over the next 5 years. If they hit that, they could cross $1 trillion maybe in 2027.
That's the general timeline based on those projections.
But based on what we're hearing, our sources are suggesting maybe even faster. With this kind of acceleration, especially adding new huge customers, could they hit $1 trillion in 2026? Maybe even sooner. The momentum feels really strong.
And that more aggressive timeline, it lines up pretty well with the sheer size of the overall generative AI market opportunity.
How big are we talking?
Well, McKinsey, for example, they estimate the Gen AI market itself could be worth somewhere between $2.6 trillion and $4.4 trillion annually within the next decade.
Trillions annually. That's vast.
It is, and that's just the direct market. McKinsey also noted that if you factor in the value from embedded software tied to Gen AI, you could potentially double that number. The opportunity is just immense.
And Broadcom is positioned to capture a slice of that, not just with chips.
Exactly. Not just the custom AI accelerators, it's the whole ecosystem needed to run AI. The network fabrics, the special interconnects, the secure cloud software from VMware, storage, all places where Broadcom is a major player.
Yeah.
And if you look at their valuation, even after this amazing run-up in the stock,
Yeah.
their forward price earnings to growth ratio, the PEG ratio, it's still around 0.65.
And typically, anything under 1 suggests the stock might be undervalued relative to its growth expectations.
Generally, yeah. It suggests the price hasn't fully caught up to the expected earnings growth, or it's growing faster than the current price implies. For Broadcom, it's kind of compelling because you have this mix of very profitable, mature semiconductor base, plus these high-growth software and AI segments.
So cash flow plus growth potential.
Right. And let's not forget the history here. Over the last 10 years, Broadcom stock is up, wait for it, 2,660%.
2,600%.
Yeah. Compare that to the S&P 500, which is up about 237% over the same period.
Okay, huge outperformance.
So that kind of track record, plus a strategic position now, it helps explain why the stock commands a premium and why analysts are so bullish about it heading towards that multi-trillion-dollar tier.
A peg under 1, that history. It does paint a compelling picture, but what's the counter-argument? What's the bear case? What could trip them up on the way to $2 trillion?
Well, beyond just a general market crash, the biggest risk is probably still that customer concentration we talked about.
Right, the hyperscalers for AI chips.
Yeah. If their buying patterns change suddenly, or if one of the big ones decides to design even more of their own custom silicon in-house, that could definitely hit revenue forecasts.
Makes sense.
And there's always the execution risk with big integrations like VMware, making sure you don't alienate too many customers or slow down innovation in the process. It's a balancing act.
But Broadcom's done this before.
They have. Their track record on integrations and operational discipline is pretty strong, which gives investors some confidence they can navigate those challenges.
Okay, so let's try and wrap this up. We've basically traced Broadcom's journey from, a key semiconductor player, maybe a bit behind the scenes, to becoming this absolutely critical infrastructure backbone for the whole AI age. Their tech touches, incredibly, 99% of all internet traffic.
Yeah, that number sticks with you.
Strategic moves like VMware haven't just broadened their reach. They've seriously boosted profits and made customers stickier.
Right.
The financials are booming. The AI opportunity is massive, especially with these custom accelerator deals landing huge customers. They're not just riding the AI wave. They're helping build the surfboard, maybe?
Something like that. They're fundamental enablers.
So that path to the $2 trillion club, it's starting to look less like a maybe and more like a when, really cementing their role in tech's future.
And, why this matters to you, listening.
Yeah.
It really shows how often the companies enabling the flashy stuff we see every day are these foundational, maybe less visible players like Broadcom.
Right, the infrastructure underneath.
Exactly. Understanding that infrastructure, not just the apps on top, gives you a much deeper sense of where tech is actually going and, frankly, where a lot of the long-term value gets created.
Point.
So maybe a final thought to leave you with.
Okay.
Given that Broadcom is so deeply woven into, 99% of internet traffic and now so central to AI, what does their growing dominance actually mean for competition, for innovation online down the road? Something to really chew on as this AI world unfolds.